What's going on, you guys? This is Aaron from Departures Capital and welcome to the video. In this video, we're talking all about the upcoming market crash. Is it going to happen? Are we going to see a market crash? This is a question on the tops of our minds right now. Obviously with markets, right around all-time highs. We're also talking about 5 unique defensive stocks that I'd personally be looking at if I was looking to position myself for a market crash. So we're going to get into this later on in this video. I've got 5 unique companies. Some I might have talked about a little bit, but some of these companies are relatively new to the channel. So I'm trying to spice it up, trying to provide you guys with a little bit more value, make these videos a little bit more exciting on top of all of our overviews and interviews that we always put out for you guys, and all of the updates, because that's what this channel is all about, guys. Last but not least, it's Friday, guys, so I hope you enjoy your weekend. These are your market minutes, so this is your daily and weekly recap. So we're going to talk all about how the markets, gold, silver, and everything has traded this past week. So let's get straight into it. And last but not least, if you do support me, the channel, and all the videos, then I ask you kindly to explode that like button. It means the world to me and helps my video so much. Along with, if you are a new viewer to the channel, you haven't had a chance to subscribe yet, but you appreciate constant, steady updates in the markets, a steady flow of new and exciting companies, or you just want to learn more about investing, then of course, don't forget to cash that subscribe button and ring the market bell for notifications. And next stop, 30K. So we've got just under 1,000 subscribers to go. So let's get this channel to 30,000 subscribers. And thank you. And let's dive into comment of the day. So we've got a lot of awesome comments. First comment of the day goes to Roland's. What do you think about BAM instead? Brookfield Asset Management. It's an interesting company. I like the other ones for their dividends, specifically Brookfield Infrastructure Partners. Brookfield Real Estate, they got a really nice yield, but their core business is office real estate. So I would prefer a company like Brookfield Renewable Energy Partners or a company like Brookfield Infrastructure Partners, of all of the Brookfields. But I do think that, BAM is a good company. It's the parent company. Dividends not as good, but I still like them. I still like the Brookfield name. Masonic Kids, Sprott just bought 5 million shares of First Majestic. That's pretty awesome. Thank you for sharing that. And Sprott is just throwing around money like crazy in the silver markets. He's going all in on silver by the looks of it. And if he's going in at these prices, that's pretty darn encouraging, guys. Lovely, lovely. We've got the music playing over the fire alarm again, but we're just going to power through this. So Sheldon Snow. Next comment of the day, another great video. You forgot to mention that Fosterville South will be spinning out shares in Leviathan Gold. I think that it is the name, and I believe that will be in October. 1 share for every share you own of FSX. These guys are going to create value for their shareholders, and thank you for bringing that up, because that's something that we forget. Yes, Fosterville has been dropping, but they do have that SpinCo coming, and it will create value. Metal Bum, great update. Never heard of Brookfield. Thoughts on cryptocurrencies? I'm not really a big bull on cryptos. I mean, I just don't understand them enough to invest in them. I did at one point invest in some crypto miners, and didn't go very well. That was after the crash, but that was when it kept crashing, similar to what happened in the MJ sector after the initial plunge, and then a lot of the companies kept going. So I would take another look at it, but right now I just don't understand cryptocurrencies enough to invest into them. Next comment of the day, Jack Yauman. Is your head on a spring? Definitely is, buddy. And got bobbleheads coming out real soon, so make sure to stay tuned for that bobblehead merch. Doc's working on the bobblehead merch. Mutant Riff, Doc, check out Wino's Adrift album, The Godfather of Doom, but it isn't doom metal. So some new music for Doc. We got a Rose from Batman. Cheese helps with leaky gut along with other milk products from Chiche. Hope I said that right. And almost doubled down on FSX today. Got some Vizsla, Mega, Uranium, and Royal Helium. So thanks for all the awesome comments, guys. Feel free to drop those comments below in this video and let me know if you think the market is going to crash. How are you positioning yourself for the next couple months to the next year, and what are the stocks that you're looking at? Which brings us to our next point before we dive into the quick recap and those 5 unique interesting stocks. If you are interested in the stocks that I do own in my public account, along with all of the trades I make, which in fact I will be posting trades into this group very shortly, along with a video today, which is our weekly private stock market full access insider member video. Goes over the week of trading, my opinion, my strategy, the new companies that I'm looking at, basically everything in a 15 to 30 minute video that I put out every single week. So we can see right there, guys, for September so far, we've got our monthly report, our trades, our portfolio update, talking all about dividend stocks, gold mining stocks, and everything else that we talk about. So if that's something you're interested in and you're interested in supporting the channel and being a member of our private group, which offers everything stated there, click the link in the description. $10 a month or $100 a year, and let's get this group to 200 members. We're pretty close, and I'm really happy with my core audience now in the group. We've got a really awesome Facebook group as well, private Facebook group with really awesome discussions going on. So trying to build this community, and each and every one of you, I appreciate you for supporting. So let's get into now the market recap before we dive into those 5 companies, guys. Wall Street opens higher as Oracle, Peloton restore faith in tech growth. So we're actually seeing the markets, though, dip into the red. The VIX is down, although, which is weird. The VIX is down 4.48% on a red day, with the NASDAQ down over 1 full percent. And the S&P and the Dow seesawing between red and green. Now, there's a few charts I wanted to take a look at. So first, we're going to look at the US dollar. The US dollar is just slightly lower on the day, down 0.06 points. Still holding on to 93. So despite, the volatility, despite the strength in gold and silver, we are seeing the US dollar hold on. I want the US dollar to pull back, but we'll see what happens. Gold is down $14 an ounce, or 0.7%, pulling back just a little bit, but holding on to 1900 and 1920. I think gold has been very strong over the last little while, kind of taking a breather, doing some consolidation. But what I like about the charts is the fact that it hasn't made lower lows, and yes, it's looking like it's made lower highs as well, but I think right now we're coming into a period of consolidation. Gold is still looking strong above those 2 key levels, 1900 and 1920, and I look forward to the fall as we go into potentially another period of volatility, and it's going to be very interesting to see how gold performs. We will be covering that. Silver, on the other hand, is getting hit a little bit harder today, down 1.49%, or 42 cents per ounce. Still above 26.50, which is, I think it's one key level to watch. So watch 26.50. We're getting a little bit close to that level now, but gold and silver do still remain above those key levels to watch for now. So keep an eye on it, guys. I haven't been as aggressive when it comes to adding gold and silver stocks. I'm pretty neutral on the market right now. Long-term bullish, short-term neutral, and we'll see what happens, but we will be keeping you guys updated, and I do intend to continue to add to some of these positions and beef up my exposure to the precious metals. But at the same time, I also want to add to those dividend stocks, and that's my whole strategy is all in the private group. So the next thing we're taking a look at is the NASDAQ, and the NASDAQ is down 1.33%, or 145 points. We are in fact seeing the NASDAQ continue to pull back, which I'm not surprised. I'm not surprised to see this pullback in the NASDAQ. And if we pull back to around 10,000, I think that, that would be somewhat of a healthy pullback and kind of needed, because we're still well above those previous all-time highs hit before this whole global illness. So for tech to sell off a little bit more, I wouldn't be surprised. The S&P 500 pretty much following the NASDAQ. We are now below previous all-time highs, and then we'll see how these markets hold on. Last but not least, I want to talk about volatility, and the VIX is in fact down again today. So the VIX did spike on that initial sell-off, and now volatility is dropping yet again, and the VIX dropping on a red day is pretty interesting, because usually when the markets tank, volatility picks up. Perfect, guys. So just in time for the gold and silver survey, and I wanted to talk about this right before we get into these 5 companies. This is the last thing we're talking about, and then we're going straight into those 5 new unique defensive companies for the next market crash. Anyways, guys, let's take a look at the Kitco Gold Survey, and the main thing we're getting out of this is the fact that Main Street is the most bullish on gold that it's been in a while, with Wall Street sentiment substantially dropping, essentially going more so neutral. So we are seeing 36% of Wall Street is bullish, 21% bearish, and 43% neutral. So the majority of Wall Street is now neutral on gold, with Main Street getting much more bullish on gold as it drops back below 2,000, but holds onto 1,900 and 1,920. So 68% of Main Street is bullish, 15% is bearish, and 17% is neutral. And I quickly wanted to just talk about the psychology behind this. This is something that I kind of predicted before, that initial pullback that we're going to get in gold. I really thought that it was going to bring a lot more retail investors into the market. And by the looks of it, at least for sentiment, when it comes to Main Street, that's exactly what's happening. People saw that run up in gold. Everyone was talking about it, but who was actually making money on that run up? It was more so institutions. It was more so smart money. And now Main Street and retail investors, they saw that initial run up. They want in on the fun, and they're becoming more bullish on gold now. And hopefully, you know, we can get a retail fueled rally second time around. So we'll see what happens, guys. That's just simply my opinion. I just wanted to talk about that. And now let's get into those 5 companies. It's going to be kind of like a lightning round, so we're not going to go in depth, take a look at, you know, investor presentation. This company makes this exact amount of money, but I'm going to highlight the opportunity, or just, you know, what the companies do. So the first defensive pick for me, it's actually an ETF, so it's the Utility Select Sector SPDR, and a very big ETF, you know, almost $12 billion worth of utility companies, the largest utility companies in America, yields just over 3% or 3.27%. And if you guys can see here, NextEra Energy, Dominion Energy, Duke Energy, Southern, American Electric Power, Exelon, Sempra Energy. So some pretty good exposure to renewable energies as well in this, you know, diverse fund. But take a look at XLU. It is one of my biggest holdings in the utility sector. I do really like the company, and I just overall, I like the utility sector as a defensive sector that pays dividends, you know, for market volatility. So that's my reasoning behind that. Then we've got an interesting one. So for all my Americans looking for some diversity, we've got a company named Bell, or BCE Inc. They're one of the largest telecom producers in Canada. They're one of the largest telecom companies in Canada, with an $8.62 billion market cap and a dividend of 5.78%. So if we look at the past, you know, this is the max chart, but if we look at the last 5 years for Bell, the stock hasn't performed that great. It's traded anywhere from 40 to 46 or 7, but it pays a nice dividend, and it's not at all-time highs yet again. So, you know, with everything that's going on, I think the price of companies like this is just going to continue to increase. Telecom is an essential service, so being able to pick up Bell in the mid to low 40s, in my opinion, right now looks pretty decent, and you get that 5 to 6% yield, with the potential to, you know, make a little bit of capital gains on top of that. So parking some money in Bell for me right now looks like not a bad idea, and that is probably one of my top dividend picks for the rest of this year. So now let's get a little bit more defensive. You know, we got to have some exposure to gold, and the company that I selected today was Agnico Eagle Mines. This is a $20 billion market cap company, does pay a 0.96% dividend. We're obviously not investing into this company. If we were investing into this company for their dividend, which brings me to my next point. Always do your own research. This video is never financial advice. Don't buy any stocks that I talk about because I talk about them. Always make your own financial decisions. But anyways, guys, Agnico Eagle Mines, I picked this one because I feel like it's one of the safer large cap gold and silver miners. You know, it's pretty much they're pretty much focused on gold, but it's inevitable that they will mine other metals. But it is a gold mining stock. So quickly, just want to touch on the company, what they do, where their mines are. So our goal is to deliver high quality growth while maintaining high performance standards in order to generate superior long-term per share returns for our shareholders. Since 1998, Agnico Eagle has consistently outperformed both gold and gold equities. The thing about this company is, you know, a lot of the large caps have diversified exposure to different parts of the world. With Agnico Eagle, they've got the majority of their mines and production and businesses in some of the most stable mining jurisdictions in the world, aka North America. So as we can see here, guys, and I actually didn't know this until I read this investor presentation, they're only 3% exposure to silver, 97% exposure to gold. So this is one of the purest play gold miners you could potentially find. Strong financial position, over 1.3 billion in liquidity. But let's get to their mines. Where are the mines? This is the most important thing. When it comes to their mines, production, 48,000 ounces, 155,000 ounces, and 82,000 ounces of gold coming out of Mexico. Then we got 5 producing mines in Canada and 1 in Finland. So the majority of their production is in fact coming out of Canada, with over 1 million ounces by the looks of it. 300,000, 140,000, 230,000, 190,000, and 400,000 ounces coming out of their 5 Canadian mines, and then 186,000 ounces coming out of their Finland mine. So that's good for a couple million ounces of gold per year. And like I said, I like Agnico Eagle as an even safer company. You know, gold's defensive. Having the majority of their mines in Canada and then the remainder of their mines in fairly safe mining jurisdictions like Mexico and Finland, this is definitely one gold stock to take a look at if you are a fairly cautious investor, especially if you're cautious on mining jurisdictions. Take a look at Agnico Eagle, and we have 2 more companies on the way. That next company, of course, is it's totally different. Talked about this company before, but it's called Welltower. They're one of the largest retirement REITs in America, with businesses all across America and even in Canada. Now, I like the company for their dividend. Still pays 4%. They do have a $24.8 billion market cap. And, you know, if we see a market crash, it's a lot different than what affected this company initially. So we saw the company crash, obviously, you know, $90 a share, over $90 a share, 52-week high of 93, all the way down to like 30, all the way down to lows of $24 per share during this whole global illness. And that's all because, you know, some of the hardest hit places were in fact those retirement homes, the elderly, more susceptible to this global illness, and unfortunately there's a much higher death rate. But we can't ignore the fact that, you know, the long-term trend of the baby boomers getting older is just inevitable. They're going to need more care, and this is one industry that, in my opinion, will prevail. So taking a look at this, being able to pick up Welltower right now at 58 a share when markets are at all-time highs makes me believe that, you know, hopefully now if the market crashes, it's not going to affect these companies like it did initially, with all of the fear and speculation that these companies are going to lose tons of money because less old people are going to go into the retirement homes, which I just don't think is possible. They're just going to need to change the way that they conduct business. But this will be one sector, just in my opinion, that's going to remain in demand, and they're going to continue to make money. So I just quickly wanted to take a look at Welltower and their website. Welltower delivers the healthcare infrastructure necessary to facilitate better treatment at lower costs and keep patients out of the hospital. So some of their buildings, senior housing, post-acute care, and outpatient medical. And I just want to pull up the chart here, guys. Massive company. So they've got properties in Calgary, Edmonton, Vancouver, San Francisco, LA, all throughout America, Dallas, Florida, and the majority of their properties here on the East Coast, New York, Boston, Montreal, Toronto, with a ton of properties in terms of senior housing operations in Canada. That makes up the majority of their Canadian businesses, and then also a lot of senior housing and in America. So take a look at this company, highly diversified. I do think it is in a defensive sector that would be less susceptible to a sell-off this time around, because this sector has already been hit, and I just don't think that it's going to get hammered like it initially did. I think, you know, the things susceptible to crashing nowadays are those stocks that are trading at really lofty valuations that have fully recovered, and, you know, people are just looking to take some profits. And that brings us to the last company, Philip Morris International. It's a Vice stock, but I want to talk a little bit about my opinion on their business. So things I like: 5.97% dividend yield, which is a very, very hefty yield, and a 52-week range of $56 to 90 cents. So although running quite substantially over this recovery, the stock is not yet at all-time highs. Now, I want to talk about their business right now, because I think, you know, tobacco and Vice stocks right now, they're in a kind of a tricky situation. So they've got billions and billions of dollars to invest into new technologies, but when looking at their website and the way, you know, they're positioning themselves right now, it looks like they're trying to give off an image of, you know, being more responsible, catering more towards, you know, caring more about people's health. Because let's face it, you know, there's still a lot of people who smoke, and there's still a lot of people who need to get that nicotine no matter which way it is. So I think that that will always be, you know, an industry. The Vice industry, for anyone who doesn't know, Vice products are just things that people turn to, or things that, you know, the bad stuff like alcohol, tobacco. You know, looking at their website, delivering a smoke-free future. US FDA authorizes IQOS as a modified risk tobacco product. Reporting on sustainability. Good conversation practices for PMI smoke-free products. That's where it looks like they're kind of positioning themselves. And I definitely think there's lots of money to be made. There's really still a strong market there. But this day and age, they have to invest a lot more money into these products in order to make the money, essentially. So it's not like they can just pump out cigarettes and sell them like crazy anymore. So I just want to dive into the investor presentation real quick just to get a look at the company, what they're up to. This is as of July 2020. So they even have an investor relations app. So what's their outlook? Uncertain environment, gradual improvement. Uncertainty remains in terms of volatility and risk of resurgence, economic fallout, relative stability in some geographies, notably the EU region, continued low visibility in some other markets such as Indonesia, Latin America, and duty-free. Business dynamics. Normality in consumption occasions will take time to recover, but underlying industry volumes are sequentially improving. We do not assume widespread increases in down trading, concentrated in certain markets with an existing trend due to higher price gaps. Some delays in planned pricing due to global illness-related restrictions and continued growth in IQ-OS users and HTU sales. So like I said, Philip Morris has a ton of cash. We're not going to dive into their investor presentation too deep. I just wanted to give my thoughts on the company. And the reason why I picked it because it is a defensive stock, or generally Vice stocks tend to be defensive. But right now, I think they're at an interesting time in their business where they're investing into newer technologies, seeing how they go, becoming a more innovative company as opposed to, just being a straight up tobacco company, because we know that people are much more health conscious these days, and that's just the way it goes. So those are my 5 top picks, and we're going to need to also take a look at the charts real quick, and that will be it for the video, guys. So we're going to go backwards here in terms of our 2020 watch list. Lockheed Martin's the biggest gainer, followed by Coca-Cola and Brookfield Infrastructure. Biggest loser is Beyond Meat. So now let's take a look at the MJ sector. And I just have a few quick comments for this. Ianthus, MedMen, and FSD, 3 biggest gainers, but we are seeing ACB absolutely tank yet again, down to $6.93 American, or $9.15 Canadian. So ACB cannot continue. ACB cannot stop sliding, and I really do think it's because of those $1.8 billion write-downs, and that's something that I talked about for so long needing to happen. So I'm happy that it happened, but it's killing the stock right now. So they're in a really tough position right now. In terms of gold and silver stocks, we're not seeing much green, but Fosterville South is the biggest gainer on the day, up to $2.99, up 5.6%. And Nova Gold is the biggest loser on the day. And last but not least, the dividend stocks, we are seeing Brookfield, Algonquin, and National Bank, 3 biggest gainers. Brookfield Property, Savaria, and Northwest Healthcare, 3 biggest losers on the day. So guys, that's it for the video. Hope you have a fantastic weekend. Always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. We'll see you guys in our next video.